I'm Priscilla Barrera with the Investing News Network, and here with me today is Robin Goad, President and CEO of Fortune Minerals. Thank you so much for joining us today.
Thank you, Priscilla. I'm pleased to provide the interview.
All right. So we're here at Cathodes 2017, the first time that an event of this type takes place. What are your main takeaways from the conference so far?
Well, there's a lot of takeaways that are a big variety of different presentations from battery companies to suppliers of all the major metals. But I think the key takeaway is that there's going to be a huge demand for lithium, for nickel, for cobalt. There will be some variations on the demands because of different cathode chemistries. But the main takeaway is that, for example, for the cobalt market, is that we're going to see probably 100% growth in the market at a minimum by 2025, with more aggressive forecasts, probably in a tripling of the market by that time.
And there's been a lot of talk at the conference about the change in chemistry in batteries. Do you think cobalt will be replaced in batteries anytime soon?
Good question. I think the key takeaways from what we're learning from this from the presentations here are very interesting. We just heard a good presentation from Intel, which explained the logic on why LCO is used in portable electronic devices, and that was primarily because of the achieving energy density with a low volume, which is of course needed in thin electronic devices. And the messaging that we got there was that LCO is here to stay for probably the next 10, 20 years. Although we might see a change in the anode chemistry to lithium metal or silicon metal replacing graphite, the cathode chemistry will still be LCO. So one of the concerns about cobalt pricing has been that would see NCM or NCA replacement of LCO. That doesn't appear to be the case, which was certainly gratifying for us as an emerging cobalt producer to hear. But then on the other hand, on the EV market, where the batteries are much larger, we probably are going to see lower cobalt content cathodes. NCM 111 is currently primarily replaced by 622, and there's certainly a drive to go down to 811, which would increase the nickel content and reduce the cobalt content. Certainly, we're also seeing substitution of cobalt in NCA cathode chemistry, but the demand from the electric vehicle market is going to be so profound that we're still going to need 2 to 3 times more cobalt, probably in the next decade.
And we've heard car manufacturers looking to supply cobalt directly from upstream companies. Do you think this will be a common trend in the future?
I think right now the demand for all of the key materials in lithium-ion batteries is going to require an enormous investment. So there's going to have to be some investment coming from the OEMs in order to basically accomplish the goals of 15 to 25% penetration rates in electric vehicles by 2025. Certainly, we're hearing that messaging coming out of some of the OEMs, Volkswagen, and others have certainly have talked about direct investment in getting security of supply. We're also hearing a lot about ethical sourcing, which is very good for our project, for example. Having a ethical North American source of supply from our NICO project in the Northwest Territories. The refinery in Saskatoon will be able to show supply chain transparency of cobalt from ores right through to the production of the chemicals that are used in the cathodes. So if OEMs want to, or car manufacturers want to have a reliable source of supply, an ethical source of supply, a supply that's independent of the DRC, independent of China, independent of copper and nickel, then a project like ours is going to be very attractive for them to invest in.
And what about prices? What is your cobalt price forecast for 2018?
Well, the cobalt market is, if you look at long-term averages, historically, cobalt price has been around $20 on an inflation-adjusted basis, about $25 for cobalt cathodes. We're now in a transformation where the market can no longer be satisfied from growth and production from the DRC and the African copper belt. We've got, I think, one of the biggest impacts on the price is going to be the marginal cost of production, and we see that nickel cobalt laterites are extremely expensive, both in the capital cost requirements as well as the as operating costs. So I think looking out, the cobalt price is certainly not going to go down in the next little while because we just don't have a sufficient supply. We are in a deficit condition. There will be additional supply coming out of the DRC next year for Katanga as well as from the Ronan Cobalt project. However, that only really satisfies about 1 to 2 years in the demand. So a lot more cobalt production is going to be required, and we're going to probably see more production coming out of North America. I would say that the price is certainly going to remain around the $30 level for the next little while, but then it could be impacted by supply chain issues with the DRC because there's certainly a lot of political instability there. The current regime has refused to cede power, which was required under the Constitution. So if you have any kind of disruption in the supply from the DRC, you could see very high prices. Then compound that with the transformation that's happening in the electric vehicle market and in stationary storage. There's going to be huge additional demand coming. So I'd say that prices are going to probably continue to go up. We could see price spikes very similar to what we've seen in the past, for example, up to $50, $60. Eventually there will be an equilibrium as new production comes on stream, but that's going to take some time.
And talking specifically about Fortune, your share price has increased almost 70% this year. Why is that?
Of course, that's reflecting the higher cobalt price and the interest in the cobalt market. Market recognition that cobalt prices are not going to be sort of $10, $15, are going to be $20, $30 or more. Current price is obviously $30 for cathodes, plus a small premium for cobalt salts like cobalt sulfate, which is what we were going to produce. So I think the recognition is finally broadly held that the electric vehicles are coming. They're coming fast. The penetration rates that are being forecast seem to go up all the time, and you just can't build an electric car without cobalt.
And your NICO project is undergoing a feasibility study. Can you let us know what is the latest update on that?
Sure. Our previous feasibility study was 2014, so we needed to do an updated feasibility study to assist our marketing strategy for bringing in a strategic partner to financially support the project. And the feasibility study is going to reflect much higher cobalt prices. Today, $30 for cathode material, plus a small premium for sulfate. We've got a Canadian dollar, which is now about 80 cents, where in our previous study it was 88 cents. We haven't seen a lot of inflation in equipment costs, except for the equipment that's sourced in U.S. dollars, like the yellow metal. That has gone up in price, so our capital costs will reflect that. Then we're seriously considering whether we should increase the production rate, and the work to support that that is ongoing, and I can't comment exactly on where that's headed, but we should have additional reserves because of the cutoff grade will be able to go down with the higher prices. That would support a higher production rate, which we are looking at right now. And the goal would be to produce as much cobalt, obviously, as possible, because some of the feedback we're getting from potential strategic partners is they want a lot of cobalt. And if we can get our production up by 25% or more, then we should be able to satisfy those market demands.
And my last question for you today, what other company milestones can investor expect in the near future?
Okay, I think the major milestone, of course, will be project financing. We've retained PricewaterhouseCoopers as our financial advisor to help us bring in the project financing, which should come in as a combination of both debt and equity. The equity component will be largely satisfied from bringing in a strategic partner. So we have discussions ongoing with potential partners. I can't comment on how that's going, but we do have many confidential agreements which have been executed with potential partners. The feasibility study is coming in Q1 of 2018. It's going to reflect obviously some of the things that we've been talking about, but then we're also should be able to come to market with some updates on what our production rates might be in the updated study. The macro of the cobalt market is always continuing to improve. There's the demand for cobalt is going up, and every day we have more and more companies expressing interest in the project for investment.
Thank you so much for joining us today.
Thanks so much.